All right, welcome everyone. This is Okcoin Live. I'm your host, Samuel McCullough, and today is the 22nd of October. And today I have it's really excited to have our CEO, Hong Feng on, and also a distinguished guest and one of the, I guess, most respected persons in the Bitcoin community, and that's Professor Saifedean Ammous. So welcome to both of you. It's a pleasure to have you both on here on Okcoin Live, and it's just great to see you guys. So welcome.
Thank you. Yeah, it's great to be on.
Thank you so much for having me.
So today's actually a special conversation because I know that you had actually wanted to do this, Hong, and bring Saifedean on here to discuss a bunch of different topics. So we're going to be talking about the gold standard and inflation, and also Saifedean's soon-to-be released book called the Fiat Standard. So we're going to talk about money throughout this entire segment, and I think this is going to be really fun. So before we hop in, I just want to take a quick minute to talk about Okcoin. Okcoin is a great crypto exchange. Both Hong and I work on the inside, and we get to see all the fun stuff that happens on our team. But we are really building something incredible here. We are duly committed to seeing Bitcoin grow as a form of money, and we're really excited about the future and the growth of this amazing technology and money that we have today. So please go check out everything that we have at Okcoin. We have some interesting products that we're rolling out. I don't want to get too far ahead, but they have some Bitcoin related things that nobody else is doing. And also we have we're one of the few exchanges that supports Lightning Network. So it is a very I guess I'm honored to work here, and I think it's really cool. So I think we'll start from here, though. All right. So Hong and Saifedean, welcome to the show. This is Okcoin Live. We are going to kick things off now. So I know that you wanted to start out with the gold standard, Hong.
Yeah. Actually, before that, I just want to give everyone a little context here, because I'm personally a big fan of Bitcoin, and the reason I'm getting really down to the rabbit hole, and when other people who are new to Bitcoin come to me and ask, how can I get started, I always give out two bits of information source. One is Professor Saifedean's Bitcoin Standard, which is long form. The other one is VJ's short form blog, The Bullish Case of Bitcoin. And we actually make Bitcoin Standard our part of our mandatory new hire onboarding package. So it's a great honor to have you on today, Professor.
And thank you so much, Hong. I'm very happy to be here. You guys, I've been working with you guys. You've been sponsoring my website, my educational website, and my podcast for a year. So I'm always happy to do anything for Okcoin.
Yeah. I think there's a lot of stuff going on over the last 18 months. And most recently, Bitcoin ETF, the first Bitcoin ETF has launched and got a lot of attention. I think the second one is launching today as well. I got asked a lot of times, what do we think about Bitcoin? Is it going to go down to zero at some point down the road? And I think the fundamental question is really about what Bitcoin is doing, right? What is the value proposition? What kind of function it is providing. So that's why I really want to have this deep dive conversation with you, because I think there are some questions out there, and I would like to probably play devil's advocate here and see how your thoughts are around some of those questions that have been put forward by a lot of the skeptics of Bitcoin as it is now. So the first one, I think, which is kind of interesting, is whenever we talk about Bitcoin as the new money, first as a store of value, but then later on a real sound money to be adopted globally. Some of the questions that people raise is comparing Bitcoin to gold. because gold has been role of money for centuries. But later, as we all know about history, it was replaced by dollar and other fiat money across the globe. Obviously, there are historical and political and geopolitical reasons for that happening. But I guess the question that people are asking is, can Bitcoin really, even if it is a sound money, can it become a real global money and escape the Gresham law that says bad money chases out the good? What's your thought around that?
Yeah, I think that's a great question. The Gresham's law refers to what happens when the government dictates that that one form of money needs to be used for payment, and that the other form of money is exchanged at a legal rate. So, if the government dictates that, let's say, the price of gold is $30 an ounce, and that you have to use the dollar for payments. Well, if they, forgetting about dictating that you have to use it, if they just say that the dollar price is $30 an ounce, but the market price is $35 an ounce, so then in that situation, anybody who wants to make payment with gold is essentially making it at a discount. You pay with a $30, your ounce of gold will get you $30 worth of stuff, but if you sell it for dollars, you'll get $35. So in that situation, nobody wants to spend their money, because legally you're forced to essentially sell your, nobody wants to sell their hard money, their gold, because legally you're forced to sell it at a lower price. But what ends up happening is that people hoard the gold and spend their easy money, and it's it's something that we see happening in many countries around the world that are having inflation problems, where they try and mandate the dollar rate of their national currency. So in that situation, they'll say that the dollar is worth this much and the local currency is worth that much. And in that situation, when they try and mandate to overvalue their currency, people are going to spend their national currency and they're going to keep the dollar. So in a sense, yes, it does drive the dollar out of circulation, but in reality, it doesn't really drive it out of circulation. What it does is it drives the local currency further and further into the ground, because nobody wants to hold it, everybody wants to get rid of it. So that exacerbates the problem. In other words, when you try and mandate that the dollar is equal to $30 an ounce, when the market rate is 35, then the market rate will end up getting even worse for the dollar. So it'll become 40 and maybe 45. And the longer this goes on, the cheaper the dollar goes against gold, or the cheaper the national currency goes against the dollar in that situation. So what ends up happening in the long run, you can see it in countries where the currency is collapsing, is yes, the hard money is driven out of circulation, but really in the short run, but in the long run, the easy money is driven out of existence. The Venezuelan bolivar and the Lebanese lira are just continuously collapsing further and further and further, and then people learn to resort to trading with the other currency, and then eventually, either the hyperinflationary scenario continues and the suffering continues, or they put the currency out of its misery, as happened in Ecuador, where they go to the hard currency.
Yeah. Do you see a similar theory in what Mark Cuban was talking about in his previous recent debate with Bitcoiners? I think he is a strong believer in store of value for Bitcoin, but he has questions around whether Bitcoin can ultimately become a form of exchange, medium of exchange, because Bitcoin is viewed as valuable. So people would be very unwilling to sell it or use it some way. So they ended up probably resorting to other quote unquote cryptocurrencies, which are less costly to spend with its future value upside compared to Bitcoin. So I think his argument was very interesting. What do you think about that in the context of what we just talked about? Do you see any?
No, because I think we can see the same situation have happened with gold at the end of the 19th century. There were other monies that were easier, but you would everybody would obviously like to spend the cheaper money and hold on to the harder money. But the tricky part is you need to find people to accept it. So I'd like to pay people with copper coins, but nobody wants my copper coins. And so, and I also don't want to get paid in copper coins.
Mm.
And so, what ends up happening is that, the wealth that is stored in the harder money appreciates. The people who store their money in easy money lose, and those people learn the lesson, or they go bankrupt. And eventually, the hard money drives out the easy money. The harder money is the one that survives. So this is what we saw with gold, and this is why I think people discuss these functions of money. I like to think of them as properties. It's not so much a function that is separate from the other, because you can't be a medium of exchange without being a store of value, and you can't be a store of value without also being a medium of exchange.
Yeah.
Those are necessary intertwined functions. Every time that you exchange something, you have to store value in it. Every time you store value, you have to exchange it in and out. So those two things are properties that go together rather than functions that are separate, that you can have one or the other. So
Mm.
Bitcoin is a medium of exchange, and people are using it as a medium of exchange. It's just not the most common and most popular medium of exchange because it's still very tiny and it's still very new. But I don't think there's a limit on its possibility for growth, because um, it doesn't need to scale on chain. It can scale with Lightning transactions, and it can scale with second layer solutions. Like, I'm sure at Okcoin, you do a lot more transactions with Bitcoin off chain than you do on chain. And I think that's the case for all exchanges. If we were to look at the number of transactions that take place on second layer solutions with Bitcoin, I would be sure that it's many multiples larger than what takes place on chain. And so second layer solutions can emerge, and so we can have these. And I think the limitation in Bitcoin being used for payment at this point is not the limit on it is not it's not the fact that there's a limit on how many transactions it can handle. It's just the fact that Bitcoin is still very new. It's only 10 years, 12 years. The vast majority of people still haven't heard of it. And those who have heard of it still don't understand it. And the number of people who understand it and own it is probably around 1 or 2% of the world. 2% is probably an upper bound estimate of the world's population that has held Bitcoin. So the chance of me wanting to buy or sell something from somebody who also has Bitcoin and is also willing to accept payment of Bitcoin, so effectively increasing or decreasing their balance of Bitcoin, is very low. About 1% of people have some Bitcoin, and therefore it makes a lot more sense for most people, for the vast majority of people, to be selling and buying with the currencies in which they're traditionally used. But I think with time, as Bitcoin grows in value, it's inevitable that as it grows, if you want to separate those two functions of money, which I think of as properties, as the store of value function increases, as more and more people store value in it, it becomes a bigger part of people's balance sheets, a bigger part of their cash balances, and therefore they're more likely to find other people who want to trade with them with Bitcoin. So in my case, for instance, on my website, for my courses that I sell on my website and for my books, because I sell predominantly to Bitcoiners, it's very common for me to get payment in Bitcoin. So I still don't get a majority of my payments in Bitcoin, but because my customers have generally Bitcoin, I do get a significant chunk. Somewhere between 20 to 50% of my website's revenue is
That's
in
great for
Bitcoin.
you.
I'm sorry?
That's great for you.
Yeah, it is. It's great. And I think it's going to become more and more common as more national currencies fail around the
Yeah.
world, and as they become less and less attractive for people to hold on to them. It's inevitable that second layer solutions for Bitcoin will emerge to take up what you call the medium of exchange function.
Yeah. Just to beat the dead horse there a little bit more, particularly for those who are new to Bitcoin, um, if they ask, if gold ultimately was replaced by U.S. dollar and other fiat currency, And there seemed to be a lot of efficiency coming out of it as well, from supporting the trade and economic growth and etc., particularly global trade. How can we see Bitcoin, replacing fiat
Yeah.
currency, and taking back that hard money being the global reserve money or a global money seat?
Yeah, I think that's also a good question. The problem with the answer that I gave earlier is that gold, nobody's using gold now. So why? And the answer to that is something that I discuss in depth in my next book, The Fiat Standard, which comes out next month. In my opinion, I think the reason is that gold has low salability across space. It's very expensive to move gold around. So I look at the cost of moving gold across the world. It's generally, if you want to cross the Atlantic, if you want to send gold across the Atlantic, the cost is somewhere in the range of around 1% of the cost of the gold. So moving a bar of gold 100 times across the Atlantic is costs roughly around the cost of the bar of gold. And that's just extremely inefficient. And so, as the world became more and more interconnected, as the technology developed, people started trading more. Cars, ships all became faster, and trains, and so people started trading more and more. And the scope of trade grew from personal trade, face to face, to people buying and selling things halfway around the world. If you lived in the 20th century, you take it for granted. You don't even think about it. 20th and 21st century, everything in your house has comes from all over the world. That your laptop was assembled in China, and the microchips were made in one country, and then the glass was manufactured in another country. So all of this stuff is constantly being shipped all over the world, and trade is extremely global. So the limitation of gold is that it's very expensive to move it around. And that means that effectively governments could neuter its monetary role because they could control the clearance of gold. They could just stop you from moving gold around because they have, you needed a physical location to be able to run those clearance mechanisms, which is the central bank. And so as long as the government can take over the central bank, then they can basically deactivate your gold. It's the kryptonite for gold. And so this, in my opinion, is what Bitcoin fixes. So in the Bitcoin standard, I discuss Bitcoin's ability to hold value across time. And in the fiat standard, I focus on Bitcoin's ability to move value across space. And in this regard, you can move $100 billion in Bitcoin right now, or $1 billion across the Atlantic, and you pay a fee of $1. And so I still think Bitcoin fees are going to go up, for final settlement. They're going to go up, but they still have an enormous potential to rise and still be much lower than the fees for gold. So effectively, Bitcoin allows us to do 500,000 clearance transactions internationally that cost 500,000 that take a couple of hours to clear, depending on how much you want to trust the how many confirmations you want. But basically 2 hours is 12 confirmations. I think that's sufficient for most purposes. So you can move an enormous amount of Bitcoin around the world with final settlement without having to resort to any of the political institutions of governments. That's really the key thing. With gold, you have to go through the central bank, you have to go through the legal system, you have to go through the political system in order to be able to have it cross borders. Bitcoin crosses borders without that. And so that's why I think it's unstoppable in a way, because there's no attack vector where governments can just come in at any point and stop it. So they could confiscate some gold, they could ban people from using it they could confiscate Bitcoin, they could ban people from using it in particular locations, but people can always take their Bitcoin and send it internationally through without having to go through government institutions. And I think that the mere presence of that exit option, the mere fact that if you try and attack these bitcoins, it's like a whack-a-mole game where you hit one place that is used for Bitcoin settlement, 100 other places spring up. In fact,
We've seen that this year, right?
exactly. Yeah, we've seen, China had the majority of Bitcoin
Yeah.
mining, and probably, I mean, I don't know, but I guess I would imagine maybe it had it was the one country that had the most Bitcoin. Probably, I think, because a lot of Chinese exchanges. If you look at Bitcoin in 2012, 2013, 2014, the majority of exchanges operating on the biggest exchanges at that time, I think, were Chinese, right? So, a lot of early holders, a lot of whales
Yeah.
in China, and yet, even with a full ban from China on Bitcoin, Bitcoin continues; it doesn't care.
Yeah, I think the combination of it being digital and anti-fragile is huge. We haven't seen this combination before. The other question I actually also have, which I think is interesting, Bitcoin has its unique value as the hardest money because of its fixed supply, 21 million. That makes it deflationary in nature. But this also leads to another interesting question, which is I remember I was at my econ class, and I remember when going through those macro econ drills, one of the given fact is that you ought to have some mild inflation as a given evil to really support and drive economic growth. And deflation is considered as really bad. And Japan has been used as a prime example for that. You don't want to get into deflationary environment and get stuck there. And also that's why all the central banks around the world have inflationary target as part of their mandate. And with Fed having that as basically one of the two prongs they have, right? A 2 to 3% inflation rate target, and also full employment. So with that, and I think a lot of the counter argument for Bitcoin is, it is deflationary, it's not good for economic growth, etc. So what's your thoughts around that? And I'm really curious how you think about that.
Yeah, I mean, I think this is this is very self-serving. The people who benefit from inflation tell you that inflation is necessary. You might want to consider their motives first, but I think logically speaking, it makes absolutely no sense. There's absolutely no reason why we need to have more money in order for the economy to grow. And in the same way, we don't need to make the inch or the meter taller in order for children to grow. People grow, and the meter stays constant. It's the unit of measurement. So there's no any economy can run on any money supply. $1 is enough for the entire global economy if you divide it into small enough units. So there's no reason for the supply to increase. And there's the example of Turkey, which in 2001, I think, their lira had gotten to a point where $1 was equal to about 1.5 million liras, and they took 6 zeros off the lira and they introduced the new lira. And so now, if you had 10 million liras, you now have 10 liras. So the money supply went down to a millionth of what it was. Does that mean that the economy shrank to a millionth? No, it does not, because the money is just the unit of measurement. So we don't need more money. And in fact, it's perfectly natural. This exactly is what economic growth is. Economic growth means we produce more things. We have more apples, more cars, more oranges, more houses, more computers, more of everything. And so when we have more of everything, money is always chosen as the thing that is, on the market is chosen as the thing whose supply increases the least. And so we make more of all other things, and we choose money as the thing that holds on to its value best because we can't make too much of it. So therefore, every year under the gold standard, things generally got cheaper. And that's a good thing. This is, people like to talk about the 19th century as if it was the dark ages and things were terrible. But really, the 19th century witnessed the most important improvement in the quality of life of countries that were on the gold standard. People in Western Europe and in the US in particular, living standards improved enormously. The Industrial Revolution came along and everything got massively cheaper on the gold standard, and that was a good thing. And that's what gave us almost the majority of the modern technologies that we that make our world today were invented in the 19th century. So we had enormous innovation that invented the car, the airplane, and all kinds of amazing technologies that we take for granted today. They came from the time of the gold standard, and they came at a time in which the price of everything was dropping, and that was a good thing. There's no reason why it should be a problem, because you're witnessing the value of your money increase, and that's a good thing. That encourages people to save, and so the more savings people have, the more secure people are, and then the more savings they have, the more capital they have available to lend out. And so we had enormous amounts of saving and enormous amounts of investments in the 19th century. And the idea that we need to increase the money supply in order to encourage investment and encourage spending, it's not true. It's not real. And actually what ends up happening is you're not increasing people's production when you devalue the money. You're just basically encouraging them to spend their money on things that they don't really need, because you're making the holding on to money itself becomes a losing proposition. When you have inflation,
Mm-hmm.
if I have $100 today, under a deflationary monetary system, if I keep them for a year, next year they'll buy me more apples, more oranges, more cars, more computers. But under an inflationary system, next year they'll buy me less. So with the deflationary system, I'm more likely to hold out and buy the car that I really need. I don't, or the high quality car, the high quality clothes, the things that really matter to me. But under the inflationary system, I'm more likely to spend on frivolous things that I don't need, because, well, maybe I can wait a year to get the car, but if I wait a year, this thing's going to lose value. So I better get any car right now. So the result is that
Wouldn't that, to play the devil's advocate, wouldn't that incentivize consumption and manufacturing of new stuff, quote unquote, leading to more growth?
it would incentivize the manufacturing of crappy stuff that breaks down, stuff that doesn't last for the long term. But the thing that people miss is that, if I don't spend this year because I keep my money for next year, well, next year comes along and then I'm going to be spending next year. So we're taking spending away from next year and using it today. And instead of me waiting to spend on the car that is high quality or the shoes that are high quality, I'm spending today on low quality stuff. So it's quite this. It's very destructive of economic production, because it forces people to spend, and it makes people undiscriminating. They spend on things that don't have very high quality, because the alternative is that your money is like a melting ice cube. So everybody is always, they can't be at peace with just keeping their money, so they're constantly
Yeah.
spending. And it's and on the contrary, the fact that if you don't spend today, you know you keep the money, you save it, so that means you spend it tomorrow, or you invest it, in which case it is invested today, and then it will produce things for other people to buy tomorrow. So that process of investment is what drives economic growth. It doesn't come from spending. If we all spend all of our money today, that doesn't magically just create infinite production. In order for production to happen, we need capital. In order for capital to be created, we need to save. And in order for us to save, we need to defer consumption. So the process of economic growth is presented from the inflationary perspective, as if spending is what drives economic growth. But in reality, investment is what drives economic growth. And in order for us to invest, we need to first save. And the harder the money, the better the money is at holding on to its value, the more likely we are to save, and the more likely we are to use that money in, to use that money wisely, and to invest it in things that matter for the long term. In other words, the more we can expect our money to hold on to its value, the less we consume, the more we save, the more we invest as a result.
Well, I would think that I mean, do you agree with the fact that like money that you have today in your pocket is worth more than money that you would receive, say, in like a week or like a year from now?
Yeah, for sure. Time preference. This is called time preference. Time preference is always positive. You always value the present more than the future. You always value a certain good today is always more valuable than the same good tomorrow.
Right. So shouldn't there be some like if you're like if I just bought a house, right? And so my loan that I just took out for my house payment in 30 years, what I'm paying for it today will be much less just because of inflation. So it's actually beneficial for me to take that loan and buy a house on credit.
That's true. And because we live in a kind of inflationary system, yeah, effectively what you're doing is that you're shorting fiat with a loan. And I think that's really the optimal strategy to deal with fiat. I think a lot of and yeah, I mean, fiat money is designed to lose value. So what you want to do is you want to accumulate as many liabilities denominated in fiat as you can, because over time those liabilities will lose value. Now, it sounds like a good deal here, but you're basically mitigating the damage that inflation is doing for you. So inflation is damaging everybody, but when you're able to buy hard assets with debt, you benefit from inflation, because then effectively when you're creating new when you're taking out a loan, your bank is making new money, they're creating new money, they're printing new money, they're effectively subsidizing your house purchase with the inflation, they're
But
creating the new money for your house.
I mean, the bank owns the title, right? So from like if you look at the assets and liabilities on their balance statement, they'll have the title of the house, and then they'll have the loan as well too. I think we're probably getting into the weeds too much. I mean, maybe we could take a step back and just talk about how money or how fiat money is created in the first place, and how our system of money like looks like today, and why that's so different from a Bitcoin version of money.
Yeah, and that's really the discussion in the fiat standard. In other words, when you take out the fiat, people think of it as paper money and they think government is out there printing it, but in reality, very small fraction of fiat money is in paper. The majority of fiat money is digital. It's a digital currency,
Mhm.
and that digital currency is created by lending. Every time new loans are made, new money supply is added to the supply. So when you take out a loan to buy a house, the money supply is going up. When you pay back the loan, the money supply is declining, because you're putting money back in the bank, and the money that's back in the bank's reserves doesn't count as part of the money supply anymore. And if you default on your loan, the money supply also contracts. So um, money is created through lending, and that's really why in the fiat standard I describe, um, I call lending as fiat mining. In Bitcoin, you have the proof of work solution. That's how you mine Bitcoin. In fiat, the equivalent is lending. You go to a bank, you get a loan, and that means more fiat money is being created and added to the supply,
Mhm. Well,
which is different from Bitcoin or gold, where the work to make the money is done beforehand. So you the miner digs into the ground and then finds the gold, and then that gold is gold, and it's just the value in it is there, and it doesn't require anybody to perform anything in order for it to continue to have its value.
well, I think most economists would say that since we aren't on the gold standard anymore, it's specifically for the United States, it's the power of the U.S. economy. So it's the fact that we have the largest companies in the world here, Google, Apple, yeah, Facebook, because they're creating so much value in and themselves of being domiciled inside the United States. They employ so many people. That's what gives the value of the currency. Or sorry, that's what gives the currency, in this case, the U.S. dollar, its value. Instead of just a like what I guess Keynes called it a like a worthless rock, right? Or a rock that doesn't really do anything as a productive asset. So
I'm
is there anything like, do you agree with that statement, or is there something different in?
I mean, there is some truth to it, yes, in that ultimately it's the credit and faith of the U.S. government that kind of backs it up. But I think what really gives the value is the fact that the government, as we were saying earlier about gold, is that the government prevents banking in gold. There's no such thing as gold banking. That's illegal. You can't just build a bank built on gold, even though a lot of people would like to do something like that. You can't just have a bank based around gold. That's the whole point of having a national currency. The IMF doesn't let countries back their currencies with gold because ultimately, yes, I mean, those companies are great and the productive capacity is great. But if people had a free choice in the market, I believe they would choose the hard money because there's a difference between equity and money. You want to have money be something that is not equity, that is not linked, whose value is not linked to company's performance. So that's why, no matter how good the stock of Amazon is or the stock of Apple, it doesn't work as money because if you use it as money, people will buy it and they will hold it and they will create a lot of demand for it beyond the valuation that is justified by the fundamentals of the company. So let's say the company's fundamentals, the earnings and the shares and the number of shares, you measure it and you figure out that, let's say, the company's worth $1 trillion. But there's demand for money much bigger than $1 trillion. There's demand for money of, let's say, $100 trillion. So if people want to buy Apple stock as money, that will raise the valuation of Apple to $100 trillion when the fundamentals only justify 1 trillion. So because of that, there's, inevitably Apple will revert back to the value of the fundamentals. So what you want in your money is that it doesn't have a cash flow. It's something that's valued purely for its own sake, so that people can then keep storing more and more value in it, and then there's no fundamental which it can exceed. That's the key thing about gold and about Bitcoin.
Or put in other words, the speculation nature of the money is probably the key part of being
Yeah,
a feasible money.
I would
people
think
use the yeah.
I think of it a little bit differently, actually. I think it more of the ability of the holder of the money to make a claim on it, right? So with Bitcoin, if you have your private keys and you own the Bitcoin in your wallet, you always have a claim to that Bitcoin. You can settle whenever you want to at any point. However, if you deposit your money into an exchange like Okcoin, it now becomes a different claim. Now Okcoin owns that asset. You have a liability to Okcoin, so now you have a weaker claim on your Bitcoin. And the same thing for even using Lightning as well too. These as soon as you go into these like layer 2 or even using any companies, you have a weaker claim on that money as an asset. And it's the same thing for the U.S. government too, right? Where kind of the base guarantee is the I guess public money of the United States. So the central bank guarantees the deposits to the primary dealer banks. But then when a primary dealer bank goes to like a commercial bank or some other smaller regional bank, those are weaker claims that those banks have on there. And then when you get to like a retail account that you would put money into, that I would go put my money into like a normal bank account, that's a weaker claim, right? And so like when you're asking, I think it more of like when everything goes bad, when there is a collapse or there's some huge economic downturn, people start to get really scared and they panic. And so what is actually backing your money when you need it the most?
Yeah, exactly, and that's why when that happens, Apple's earnings decline or Amazon's earnings decline, and then your money stops working. But if your money isn't linked to these earnings of these companies, if your money is just a hard asset, then when there's an economic downturn, it doesn't have any earnings that get hurt. In fact, what ends up happening is that people will liquidate their investments because they don't want to take on a lot of risk, and they'll move on to money. And so the money that you have will rise in value, and that's kind of the good thing about it, that when there is a crisis, this is kind of the way that hard money bails everybody out, because when there is a crisis, if you just had your own cash, your cash becomes more valuable. And so if you lose your job, or your stocks crash, your cash is what gets you out of the uh, financial problems that you have, because it rises in value, because its value is not dependent on performance.
Hmm. Yeah, and I think the other interesting aspect that I see with at least between Bitcoin and fiat is that you, like when you think about the credit being created, right? I don't think many people want to take loans out denominated in Bitcoin. If the price of Bitcoin goes from like 60,000 where it is today to like 120,000 at the end of the year, that's a really bad. I mean, it's a really bad deal. Now you have to pay back twice in dollar terms what you borrowed. Um, but with the dollar based loan, you have a pretty general idea of where that loan is going to end up in a year or two, even if there's some devaluation, right? Because it's denominated in dollars. And like you were talking about earlier, it is uh, in someone's best interest to take out these like fiat based liabilities. Um, at the same time, though, I think there's an interesting difference which Bitcoin has uh, between fiat, right? Where with fiat, it's created a really great secured way of taking credit. So all the controls that we have between the banks and the central bank, they're all guaranteed as a way to allow for unsecured credit to be taken by like myself, and not being able to pay for the entire house all at one time, or other banks or commercial businesses who want to take unsecured loans on the basis of being able to pay that back in the future. But with Bitcoin, I don't know if we've gotten to the point where we've kind of breached Bitcoin's ability to fund these unsecured loans, because I don't know if anybody would actually want to take an unsecured loan against their Bitcoin. And so I think there's an interesting dynamic in play where depending on the type of credit that you want to take, whether it's an unsecured loan to pay back in the future in fiat versus Bitcoin, where you can take a over collateralized loan in say dollars, but there isn't really that hybrid that we have yet.
Yeah, for sure. And I think, in the fiat system, the reason that these loans exist and come out looking like such a good deal is that effectively the cost or the risk of the loan is socialized to society. So everybody's paying for your house loan through the devaluation of their currency. So, and that's, it looks like a good deal for you, but, you're missing the other part of it, in which you are paying for everybody else's house as well. So it's this system where it's effectively a system that benefits borrowers. The more you're able to borrow, the more you benefit, and the less you borrow, the more you're hurt. And of course, who are the biggest borrowers? They're essentially the richest people. The richer you are, the more you borrow. So it's governments and big banks that benefit from this, because they're the biggest borrowers in the economy. So when you borrow for your own house, yeah, you come out ahead. You help yourself. But of course, the people that are really hurt are the ones that are the poorest, who don't have the ability to borrow. And the only thing that they can do is hold a little bit of cash. And that's basically how you end up with this. With this kind of large inequality, because there's this underclass that can't benefit from the credit system, because it's very hard for them to get credit, and it's very hard for them to climb out of poverty, because if they try and save in money, their money is constantly devalued. And so within the US, there's a significant chunk of the US population is in that situation. But I think the real tragedy is internationally, where a much larger chunk of the world's population is stuck in this cycle where their money is constantly losing value, and their current and their national governments are borrowing and devaluing their currency and financing their spending at the expense of their citizens.
I mean, maybe it's a little bit different where the until Bitcoin came along, and maybe more notably like decentralized finance, uh, normal people haven't been able to access the same type of credit that someone with $1 billion could. So if I'm a very wealthy person, I can pretty much go and access credit at whatever the like close to the rate set by the central banks. So there's not a lot of distance between the interest rates that I would be getting versus if I'm poor, I'm taking interest rates at like 20%, 25%.
Exactly.
But
Exactly.
what's great about Bitcoin is that it allows you to own the asset and then also get the same kind of interest rates for borrowing in dollars as a billionaire would, just by owning the asset itself. So I think that's something that I really like and is notable for me about Bitcoin as an asset.
Yeah, although I mean, I think I'm not so sure that's it's very different now, because if you're a billionaire, you can buy $1 billion of Bitcoin and then you can borrow against them at a much lower rate than if you had $1,000 of Bitcoin. I think the rates will differ in that regard, but I think that we're still in a point where Bitcoin now is not the monetary basis of the is not the basis of the monetary system. But I think
Yeah.
if we lived in a world in which we had a Bitcoin-based economy, I think I think the economy would be far more heavily reliant on equity investment rather than debt investment, and I don't think that's a bad thing. People say, "Well, who's going to want to borrow in an economy like that?" Well, why should we have borrowing? Borrowing itself is not a good thing. It's the things that borrowing facilitates that we want. So people borrow in order to invest, or people borrow in order to finance their companies, but you can also finance your company with equity, and I don't see why that's a worse thing. In fact, I think it's a better thing. I think it's a healthier system if you get equity and then you share with the upside and with the downside, whereas with the current credit system, large lenders are able to basically be protected from the downside, because they have connections with the banking system, with the central bank, and then the central bank can bail them out. And as you said, there's all these differences in the degree of in the interest rate that different borrowers can get. So if we got rid of that, then equity, the rate of return that you get depends on how good you are at picking your investments. I think that's a much better world than a world in which the central bank determines your rate of return.
How far do you think we are, or what's the probability of having a Bitcoin-based economy? Because I think right now Bitcoin as a store of value, as an asset class, is really getting a lot of spotlight. But I see there is also a possibility of different versions of future with Bitcoin in it. Right, it can be a base of economy, it can also be just part of the legacy system as an asset class, or somewhere in between.
Yeah, I mean, I struggle to see. I've heard this perspective, the idea that Bitcoin just remains as an asset, but I just struggle to see how we get to a point where Bitcoin grows so much and then it just stops growing, because I think the more it grows, the more tempting it becomes for other people to get into it, and so the more it grows further. So I think maybe when Bitcoin hits $100 million coin, then at that point, there's not going to be dollars anymore. And that's when there's not going to be dollars or fiat money at that point, because all the value stored in those things goes into Bitcoin.
I guess I would just retort that the arrival of the institutions, these billion-dollar funds that are starting to buy Bitcoin, I mean, they won't be using it for transactional basis. It'll go into a custody provider, and I don't think it'll ever, maybe if they're reasonable, it would never see the light of day again. So you could just assume that over a long enough time period, the custody providers who are holding Bitcoin for large institutions would eventually own most all of it in their custody, and self-custody wouldn't really be a good option anymore.
Between institutions and governments, I guess.
Yeah, exactly. And then it would just revert to something like what we have with the gold standard now, where institutions and governments control most of it. It doesn't really move. If you want to make a transfer of Bitcoin, you wouldn't settle in the network because that would be too costly. You would just use the custody provider who could provide the transaction for maybe 1,000% or for free.
Yeah, I think the majority of transactions are likely to end up being on custody platforms, but that's already the case now. We have 300 to 500,000 transactions a day being done on chain, but we've got I'm sure Okcoin on its own does more than that off chain. So we already at the point where more off-chain transactions. But the key difference is that, and this is like the historical part of my next book, the Fiat Standard. When the British government told the British people that we're going to take your gold because there's war and we need to defeat our enemies, and if you want to use your gold, then you're an enemy of the state. When they did that, the British people had no alternative but to hand over their gold, because if they wanted to send their money anywhere, they could use the gold with each other. They could still use coins to trade with one another, but coins are not very useful with gold. They're too bulky, they're too big, they're too valuable, and most transactions aren't denominated in individual coins, and then you can't move the coins across borders. So that's it. Once the governments got into war, each central bank basically neutered its population's gold by telling them our central bank will only take gold from you and will only give you paper instead of it. And what could you do? You couldn't do anything with that. You couldn't go around it. But with Bitcoin, you can, and that's really the key thing. It's not necessary for everybody to buy all of their coffee and all of their lunch with on-chain Bitcoin. We need on-chain Bitcoin as a credible threat against the people that are carrying out those secondary transactions, second layer transactions. If they start messing around, if you suspect that they're fractioning your coins, that they're accumulating more liabilities than the coins that you have, in that situation, you can take your coins from them on chain, and then they need to deliver the coins. So I think there's which isn't the case in gold. In gold, you couldn't make a call on your gold from the Bank of England. With Bitcoin, it's very easy to do that because you can just take it on chain. Now, there's not enough. You can't. You won't be able to buy your coffee off chain when you take it out from the provider. So you're not going to be doing this every day, and not everybody's going to be doing it every day. But when there's a when there's a when there's a need for it, when there's one bank that people suspect is doing something shady with their money, then yeah, there's enough room on the blockchain for everybody to pay the transaction fee to take their money out and put this bank out of business and move it to another bank. That's really, I think, the key difference. That's why I think Bitcoin has a much better chance of resisting being taken over by governments, because yes, even though the majority of transactions are going to end up being on a second layer, everybody has the credible threat of exit from these secondary layer providers.
I guess I have one last thing that I wanted to bring up for both of you, is that the Federal Reserve's mandate is for full employment and price stability. What do you think about that mandate? And I guess, Saifedean, for you, under a Bitcoin economy, would that be the same, or would that even be necessary to have a mandate?
I think it would not be necessary. Under the gold standard, there was no central bank that was mandated with price stability or unemployment, and yet prices didn't rise, prices dropped, and effectively there was no such thing as unemployment. You don't see unemployment statistics back in the 19th century. This modern phenomena of people being laid off en masse, I think, and I think the Austrian school economists will argue, is a product of the disruptions to the capital markets and to the labor market that happen from monetary central planning. So, in a sense, central banks are the problem masquerading as the solution. Their intervention is what creates the inflation, and we can only assess we can assess them by their own criteria. The price of everything now is about 100 times higher than what it was when central banks began their price stability mandate. So they've clearly failed with this. Prices are constantly going up, and they've also failed at eliminating unemployment. We had massive economic crises in the 20th century, and this is not something that is needed. You don't need a central bank to do those things. In a free market, those things just happen on their own. In a free market, people know how to choose the money that holds on to its value, and so they don't get inflation. And people work when they want to, and they don't work when they don't want to. It's not a policy decision for central banks to take.
Yeah, it was funny. I was when it was years ago then when I decided to more than 10 years ago now, when I decided to take on investment banking job at Goldman. A major driver for my decision back then was that I think that is, investment banking as part of the capital markets is sitting in the center of the free markets. And then a couple of years later, I realized that actually, you know what? It's a lie. It's, central banking is the biggest planner on the earth. It's central banking. It's planning economy. And that's why you see, I absolutely agree with Professor Saifedean. You see all the banks, central banks trying to balance all the mandates that they have. It's an impossible mission. They are creating problems and kicking the can down the road instead of doing the hard thing, which is, just hard given their mandate. It's just impossible for them to do. So that's why I personally think that Bitcoin is an exit, is a viable exit, but obviously there are a lot of roadblocks on the way, including the potential version of the future where it can become only a asset class, creation of the legacy system instead of becoming a circular system of its own. So I think the next few years will be interesting to observe.
Yeah,
Absolutely. Yeah, but even if it does that, I think it'll still be an enormous improvement because, currently people don't have access to an asset class that holds on to its value for the future. Bonds don't work, and the stocks are too volatile and require active management. You need to be following all markets to figure out what's going on and whether you should be buying this or that. And even if Bitcoin does not end up becoming a new system, its mere existence within the current system allows a lot of people a lot more security for the future. I think it's going to be unquestionably a good thing for the world.
Yeah, and I think the most important thing that you keep on coming back to is the ability to settle on chain. And if you do hold your private keys personally and you own them, you can settle at any time. And so you're able to transact anytime you want without the need of a central bank, which is or even another bank when things go bad. So that's probably a great place to wrap up on.
Yeah. Do come to Okcoin to trade, but use private key for most of your assets.
So
Yes.
Saifedean, can you tell us about the new book, the Fiat Standard?
Yes, this is basically, what I did for Bitcoin, studied Bitcoin from first principles, trying to figure out how to work. I did the same thing with Fiat for my sequel. And that's been quite a few years. I've been working on it for about 3 years now. And I'm very excited to finally be releasing it over the next few weeks. You can order it from my website now, saifedean.com. And it'll be up on Amazon and all the major booksellers in a few weeks. And it's a really exciting time.
Looking forward to it.
Paperback and hardback on the 16th of November, correct?
Yes. Well, hardback for now, paperback next year.
Okay. I'll be looking forward to reading it. There's a couple of sections that if you're interested, for those watching at home, you can actually go read. I think there's 3 chapters online right now.
Yep.
Chapter 1, 3, and 9. So go give it a read. It's pretty interesting, and pre-order the book. Actually, I'll do that today. I need to go pre-order the hardback book.
It would be great Christmas gift.
Yeah.
Yes. Well, you guys are getting copies for everybody at Okcoin. Yeah.
We are. Yes.
Yes.
All right. Well, Saifedean and Hong, thank you so much for coming on Okcoin Live today. You're welcome to come back anytime, and we can continue this discussion. I feel it was pretty short, and we probably could have gone for another hour or two. So.
Yeah, I'd be happy to anytime.
Yeah.
Thank you.
Right.
Thank you.
Cheers. Thank you.
Yeah.
Take care.
Everyone. Bye.
Bye.